Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, June the 6th, 2019, and this is the Daily Report for Gold and Silver. Market participants, investors, as well as traders are awaiting tomorrow's U.S. Labor Department's jobs report. Of course, yesterday we had ADP come out with private sector jobs, and although there was an estimate of 175,000 jobs being added in May, the actual numbers came out dismally below that at 27,000. The question is, will we see the same kind of forecast and actual numbers tomorrow when the Labor Department releases its information? Of course, that will give more ammunition to the Federal Reserve and the proposed rate cuts that both Chairman Powell as well as James Bullard have alluded to this week. Although the market has already factored in 2 rate hikes in 2019, and we would only see a big move one way or the other if in fact that number changed. As I said, we factored that in. Let's take a look at current pricing because we have gold continuing to move to the upside today. Traders, as we look at current pricing, we have the entire precious metals complex trading higher on the day. We have had split markets with typically platinum and palladium trading in one camp and gold and silver in the other. However, all 4 precious metals are higher today, and that is largely attributed to a weaker U.S. dollar. First to gold. Gold is currently trading at $1339.50. That is a net change of approximately $6, exactly $5.90, and that's up 0.44%. We did send out a trade alert moving our stops higher today, and we will discuss that in detail when we look at a couple of charts in a few minutes. Silver also gaining on the day, but it gained about 0.6%, 1488, up 9 cents on the day, with a high today at $14.99.5. That is just shy of yesterday's high, which briefly broke above $15. Platinum performing the least in terms of percentage gains, only gaining about 0.2%, a $1.60 gain, with platinum currently fixed at $804.40. And then palladium having the largest gain of the day, up 1.4% at $1345.90, up $18.60. Once again, taking that coveted title of the most expensive precious metal that has been whipsawing back and forth throughout the week. Lastly, we did look at the dollar. That is currently down about 0.27, almost 0.3%, below 97 though at 96.99. Bitcoin futures also taking a slight decline, down about $120, currently at 77.15. Let's take a look at our technical studies. Traders, although we do have gold trading higher, currently up almost $6, $1339.50. There is one caveat or one differential for the way the price range unfolded today when compared to previous days, and that is this series of higher highs as well as higher lows that we have seen Monday, Tuesday, and Wednesday did not occur today. Now, we did get a higher low, and that is important because the higher high would have been extremely difficult to achieve, really considering the exaggerated move that we saw to the upside in evening trading in Europe yesterday. We saw the market come within $1 of the record high this year, and that has occurred in February at roughly $13.50. That would be this candle here. The exception, of course, is the fact that although it made a higher high and still the highest recorded price this year on record, we also had the highest close this year on record. 1347 is where the market closed on, I believe, the middle of February, and then from there tracked lower. In other words, that could not be sustained. That was interrupted immediately by a falling market, which did not really find any support till just above $1,280. We did send out a trade alert. We recommended that you move your stop. I believe that was sitting at 21.13. My recommendation was to move it to 28.13, and the rationale behind it was to put it below the stop that occurred yesterday, and that came in right here, just below that price point. My sense is that with a jobs report coming out tomorrow, we could see some increased volatility. At any point, we could see this market top. However, we have had a genuine difference in this rally when we look at all of the other activity that has occurred throughout the year, with the exception of the beginning of this year. And that is when we saw this market move back from November and these lows just below $1,200 with a $150 rally culminating at this high here at $1,350. And that is, this runaway move is parabolic. It has been almost a straight linear line up. Typically, when you get a parabolic rise, you have a tendency or a inclination to see the market have a parabolic fall. It is for that reason that I have been moving these stops up in terms of the increments, 3 times this week. But my sense is that if I can place the stop below recent lows, and if the market continues to make a higher low on a daily basis, we can take the double-edged sword of placing a stop and maximizing profits while protecting us if the move continues to the upside, is this kind of scenario where you do get a succession of higher lows because I'm placing it below previous lows. So as long as the market continues to make a higher low on the day, as it has all week, we will remain active in the trade and active and long from 1293. So we have locked in a little bit more profits, but we want to see how the market reacts once the numbers are released tomorrow. And I believe that we are already factoring in the potential for 2 rate cuts this year. Traders, my recommendation is to maintain your current long position in gold. You have moved your stop up, and to maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow following the jobs report for the weekly wrap-up and review. Bye-bye.